Hi guys, I hope so you all are fine. Welcome to my YouTube channel. In this video we will discuss about gross profit, operating profit and net income in stock market. So come to my Google screen and see here gross profit, operating profit and net income. The term profit and income are often used interchangeable in day-to-day life in corporate finance. However, these terms can have very different and specific meaning depending on the content in which they are used. While income does mean positive flow of cash into a business, net income is something much more complex. Profit is understood to refer to the cash that is left over after accounting for expense. Though both gross profit and operating profit fit these definitions in the simplest sense, the kind of income and expense that are accounted for different in important ways. Gross profit is the total revenue minus the expense directly relates to the production of good for sales, called the cost of goods sold. Derived from gross profit, operating profit reflect the income that remain after accounting for all of cost for doing business. Net income reflect the total residual income that remain after accounting for all cash flow, both positive and negative. Understanding net income, gross and operating profit. Gross profit, operating profit and net income are all type of earning that our company generate. However, each metric represents profit at different parts of the product cycle and earning process. All three financial materials are located on the company income statement, and the order in which they appears help show the relationship to each other and their importance. The top line of the income statement reflects company gross revenue or the total amount of income generated by the sale of good and service. From there, expense and alternate income streams are add and subtract to arrive at the various level of profit. Gross profit is the total revenue less only these expenses directly relate to the production of good for sales, called the cost of goods sold. Represents direct labor, direct materials or raw materials and the portion of manufacturing overhead that straight to the corporation production facilities. Does not include indirect expense such as the cost of the corporation office. Is the key merit since it directly impact a company gross profit, which is calculated as follow. Gross profit is equal to revenue minus cost of goods sales. Since represent the cost of inquiries, inventory and manufacturing the product, gross profit reflect the revenue left over the funds of business after according to the cost of the production. Operating profit. Next of the income statement is operating profit derived from gross profit. Operating profit reflects the residual income that remain after accounting for all the cost of doing business in additional to the including fixed cost expense such as rent and insurance, variable expenses such as shipping and payroll, and as well as descriptions of assist. All the expenses that are necessary to keep the business running must be included. However, like gross profit, operating profit does not account for the cost of interest payment and debits, tax expense or additional income from investment. Operating profit reflect the profitability of the company operations. Operating profit is also referred to as earning before interest and tax. However, can include non-operating revenue which is not included in operating profit. It is a company does not have non-operating revenue and operating profit will be the same figure. Next, net income. The company profit is called net income and net profit. Since net income is the last line location at the bottom of the income statement, It's also referred to as the bottom line. Net income reflects the total residual income that remain after accounting for all cash flow, both positive and negative. In other words, from revenue, which is called the top line number, all income, expense and cost are deducted to arrive at net income. From the operating profit figure, debit expense such as loan, interest, taxes, and one time entries of unusual expenses such as purchase all the subtracted. All additional income from secondary operation of investment and one time payment of things such as the sale of assets are added. Net income are most important financial metric reflecting a company ability to generate profit for owners and shareholders. Examples of gross and operating profits and net income. Below in the sample income statement to different and locations of the three profitability metrics. Gross profit was $3 billion in the revenue of $5 million to $2 million. Operating profit was $2.2 million from the period, which is calculated by taking gross profits of $3 million, operating expense as $1 million, labeled total expense. However, we must add back in the interest expense of $20,000 because operating profit does not include interest, or $3 million minus $1 million plus $20,000 is equal to $2.2 million. Net income was $1.5 million of the period, which is located at the bottom of the income total. Revenue $5,000, cost of goods sold $2,000, gross income expense $3,000. The fundamental of corporate finance and accounting. Whatever your learning style, understanding corporate finance and according it easily when you can choose from online video course with you will be able to learn accounting and how to prepare financial statement and analyze business transaction. What's more, each course has new additional published every month and come with a 30 days money will back. Key takeaway: gross profit is the total revenue that expense directly relate to the production of good for sales, called the cost of goods sold. Derived from gross profit, operating profit reflect the income that remain after accounting for all the cost of doing business. If you like our video, please subscribe our channel. Thank you so much.